Assalamualaikum and a very good day I bet to Madam Siti Nurul Huda binti Ibrahim, my lecturer for Financial Management. I'm Izlin Izzati binti Bahtia FND from BA 246 to B. In this video, I will be covering an analysis of trend and comparative study of corporate financial performance for Padini Holdings Berhad and Bonia Corporation Berhad. Generally, we know that Bonia and Padini are two firms that running a business of selling stuffs relating to fashion and branded goods. In fact, their stores can be found scattered anywhere in Malaysia and across the Asia. When we mention Padini, it will be a main option for Malaysians to shop, as they provide a lot of choices there, such as formal and casual wear, and also accessories for both genders. Padini are having 8 kinds of labels under its name. The famous ones are Padini itself and Brands Outlet. Based on Kuala Lumpur, Padini Holdings Berhad, as today known by large number of people, is the result from the scratch-up development that was established by Yong Pang Chon in 1971 before fully operated as a retailing industry with flagship brand Padini in 1975. Meanwhile, Bonia is one of the firms that can be identified as the same level with the other international brand, as most of their goods quality are top-notch. Their specialty relies on leatherware products like shoes, handbags, and luggage. Bonia Corporation Berhad was founded by S.S. Chiang in the year of 1977. The name Bonia has been derived from the sculpture artwork of Giambologna, along with his passion of Italian handcrafted creation of leather. Let us look towards the trend analysis for Padini first. In liquidity ratio, specifically for current ratio, Padini had marked the excellent growth of current ratio within 3 consecutive years. The value of ratio slowly increasing from year to year, starting from the year of 2019 with 3.92 times to 4 times in 2020. The progress can be seen in 2021 with 5.4 times, as it is the highest between them all. This proves that Padini has an ability to pay its short-term liabilities using their current assets. But the reduction in current liabilities were resulting from lower business volume like lower utilities expenses and staff commissions. As for the net working capital, the data fluctuates. During 2019, Padini displayed the working capital in the value of 602.3 million ringgit. However, it shows a downfall in the following year, totaling 5,075.3 million ringgit. That depicts the shortage in their funds to meet the financial responsibilities and to invest in other activities. Yet, Padini grossed the highest amount of working capital in 2021, as much as 625 million ringgit, as the working capital are mainly financed by cash generated from its operation. Where we touch on inventory turnover, Padini exhibited the declination within 3 years in a row. The peak amount of turnover were leading in 2019 sums up to 3.91 times that give reasons behind the strong sales and high revenue. Still and all, the value slowly dropped throughout the years ahead during 2020 and 2021, as much as 2.98 times and 2.93 times respectively. The deterioration shows that Padini held its stock longer than the previous measured time. The low inventory turnover may happen due to the reduction in demand during the COVID-19 pandemic outbreak, where people spending less. As for the total asset turnover, Padini represented the declination within 3 years back to back. The most recent year, 2021, had reflecting Padini's worst performance, as the total asset turnover only reached 0.81 times, not as vast as the year 2020 and especially during the year of 2019 that captured over 0.97 times and 1.87 times correspondingly. 2021 result had remarked the unproductivity of the assets itself to make a profit contribution to the business and reduction of sales due to the economic pitfalls that caused by COVID-19. When we aim at that ratio, the data fluctuates. In 2019, Padini disclosed the debt ratio in the value of 22.52%, which is acceptable since Padini are exposed to less risk of failure. However, it shows a huge amount in the year of 2020 that sums up to 45.2%, whereby it simply shows that Padini creditors have supplied for almost a half of the company's total financing. Yet, the figure is going down after a year, totaling to 37.09% of its source of financing from debt. The debt ratio reduction in 2021 occurred in line with the decrease in number of its outlets. As for the time interest earned, Padini collapsed within 3 years in a row. Before the major decline, the year of 2019 demonstrated the most magnificent year for Padini to cover its annual interest cost by 120.43 times using its operating income. These past years of 2020 and 2021 were highlighting firm reduction of competencies to service debt payments, equaling to 5.11 times and 4.51 times individually. The reduction in interest expense on lease liabilities, which resulted from the early termination of some non-performing outlets. In operating profit margin, Padini represented the reduction of value within 3 years back-to-back. In 2019, the operating profit margin signaled highest rate between them three, with 12.4%. This explains how well Padini are being able in dominating the income statement items. However, the figure went a minor down in 2020 to 9.85% and more downturn at 9.25%, resulting from the impact of COVID-19 and lockdown restrictions implementation. As for the return on assets, Padini extreme downfall happened continuously for 3 years. During 2019, Padini displayed its investment return at 16.76%, which shows its management efficiency to generate earnings from investment. Somehow, it shows a quite amount of reduction in the following year, as much as 5.38%, and more reduction was recorded in 2021 at 4.24% to be exact. It might occur because the act of over-invested in assets that have failed to build a yield growth. We will touch on Bonia trend analysis. Following the liquidity ratio, the current ratio of Bonia shows a fluctuation. In 2019, it indicates the highest amount among the three, with 3.06 times. However, the figure dropped slightly in 2020 to 2.79 times. Current assets lowered as the dividend paid was higher than the profit attributable. Despite the downturn, this organization still be able to cover its current obligations. The improvement were recorded in 2021, whereby the value of ratio rising a bit to 2.89 times. This proves that Bonia has a capability to settle its short-term creditors using current assets, even though the firm kind of having a trouble to pay off liabilities back in 2020. As for the net working capital, Bonia exhibited the declination within 3 years consecutively. The peak amount of working capital was sky high in 2019, sums up to 180.5 million. Still and all, the value decreasingly fall throughout the years ahead. As much as 161.2 million ringgit and 135 million ringgit respectively, that occurred as the result of low inventory turnover. In the case of inventory turnover, Bonia displayed its inventory rollover at 2.28 times during 2019, which depicts its sales efforts are effective. However, it shows a downfall in the following year, as much as 1.63 times. It might occur due to the spoiled or obsolete items of leather and lower demand in sales. Yet, Bonia stock rollover rose again in 2021 at 2.04 times, shows that Bonia inventory management were effective. As for the total asset turnover, Bonia represented the declination within 3 years in a row. The most recent year had reflecting Bonia worst performance, as the total asset turnover only reached 0.45 times, not as extensive as past years, which obtained over 0.87 times and 0.61 times consecutively, as few of their stores were closed due to non-perform in order to optimize the resources. In debt ratio, Bonia were moderately developed within 3 years in a row. Prior years of 2020 and 2021, the firm highly associate with its creditors that sums up to 31.63% and 33.81% respectively, as Bonia bought of investment properties financed by bank borrowings. Although the ratio does not yet exceeding the limit of 50%, Bonia are prone to high risk linking with fund borrowings affair, as financial institutions are more likely to charge the interest huge in amount. In contrast with 2019, Bonia came out with the debt ratio of 25.66%, which is terrific since Bonia are not too depending towards debt financing to buy additional assets. From the stated time interest earned of Bonia, it does declare the fluctuation of data. In 2019, Bonia underlined its time interest earned in the value of 9.09 times, which was splendid for them to cover the annual interest cost using its operating income. The following year of 2020 shows a cutback to the extent of 2.79 times. It was determined that this firm might face a challenge to cover their expenses since people are spending less. Yet, the numbers of time interest earned jumped up in 2021 through the scale of 5.21 times. When we look into operating profit margin, the evidence here fluctuates. Thus, in 2019, it indicates the highest rate among the three, with 9.38%. This justifies how well Bonia are being able in controlling the income statement items. However, the figure went a minor down in 2020 to 4.84% due to the movement restrictions that urged netizens to stay at home to keep COVID-19 from spreading. The improvements were noted in the following year. In accordance with 2021, the value of division stood up as much as 9.26%, resulting it to nearly outshine the track record in 2019. As for return on assets, Bonia once again marked the fluctuation of data. During the year of 2019, Bonia displayed its investment return precisely at 4.39%, which shows its management efficiency to generate income from investment in the form of assets. However, it shows a serious reduction in the following year of 2020, as much as 0.6%. It occurred due to disposal of investment properties and trade receivables. Even so, Bonia return on asset began to expand in 2021 at 2.63%, shows that Bonia were able to make an earnings. Cross-sectional analysis will use the data taken from the latest year, which in this case we will look at the data in the year 2021 for both Padini Holdings Berhad and Bonia Corporation Berhad to compare the performance between these two companies. In liquidity ratio, here stated the current ratio, which the ideal ratio must be more than 1. This indicates that both of the companies are able to clear their short-term liabilities. In spite of that, Padini can be claimed to be more proficient in clearing its current obligations when compared to Bonia, since 5.40 times is better than 2.89 times in general. As for the net working capital, the ideal ratio is rested on the positive value. This demonstrates that both of the organizations are having enough funds of working capital to run the business. However, Padini performance are clearly better with 625 million ringgit, suggesting that it is more liquid and more competent to settle the debts and bills if compared to Bonia with 135 million ringgit. In inventory turnover, both of the firms reveal that they are able to handle their inventory management really well, as their rollover stockpile is more than 1 time, referring the optimal ratio. However, Padini performance are more favorable since they are converting their stocks to sales for 2.93 times rather than Bonia that went about 2.04 times of inventories restocking. This shows that Padini's demand of products are slightly high and they also have an ability to sell their goods in a rapid time. As for total asset turnover, both of the business entities had achieved the frustrating result, as the figures shown are below the optimal ratio of 1. As a consequence, it thus positioning both companies to end up in a poor performance in earning sales from the utilization of their assets. However, Padini performance are a little bit higher at 0.81 times, in contrast with Bonia that marked the value of 0.45 times. In that ratio, where the ideal ratio is rested between a value of 20% to 50%, both of the companies are less depending towards debt financing to buy firm assets. In spite of that, Bonia identified to take risks at a lower level of degree, marking at 33.81%, since they acquire a greater amount of assets than total debt. It shows here that most of their assets are wholly owned, utilizing their very own equity for financing purposes, and not solely rely on that. In contrast with Padini that is closing the value of 37.09%, which can be considered risky. As for the time interest earned, where the ideal ratio is more than 1, both of the organizations are suggesting the ability to cover their annual interest costs by using the source of operating income. However, Bonia performance are certainly better with 5.21 times, which hinting that their firm have a higher capacity of servicing debt payments on time, compared to Padini with only 4.51 times. In operating profit margin, it looks like both of the organizations reveal that they are competing for the top spot with a remarkable result. However, Bonia were able to beat the performance of Padini by the result of 9.26%, which is rather pleasing, whereby Padini recorded the portion of 9.25% with a small ratio difference. This describes how decent of Bonia for being able to control the income statement items comprising of revenues, cost of goods sold, and operating expenses. While in return on assets, both of the business entities achieve an excellent result since they are able to make a positive return on assets. However, Padini performance are obviously greater at 4.24% as higher percentage is favorable, in contrast with Bonia that marked the division of 2.6%, which is somewhat lower. Thus, it verifies Padini management efficiency to generate extra income from investment in assets. While for Bonia, it may be happening because of highly competitive market that eventually leads to the unproductivity in assets. In summary, Padini Holdings Berhad are acing the performance on the majority of ratios. To support that statement, Padini are conquering both groups of liquidity and activity ratio. Meanwhile, Bonia are able to overpower the category of leverage ratio since the debt financing level of theirs were not that high in risk. As a matter of fact, a profitability ratio result are shared by both Padini and Bonia, where Bonia had successfully dominating the operating profit margin, while Padini are managed to influence the return on asset section. I strongly recommended the future investors to proceed with the investment of Padini Holdings Berhad, as it is far more excellent in terms of performance. To overcome this problem, it is advisable for Bonia for reducing the prices of their goods for a while, since most of the items are quite pricey. This reduction in price can attract more people in engaging with Bonia products.